because the most important life insurance is the one that's in place when you need it. You know, not all this with all these bells and whistles, and then you let it lapse, and
right.
you know you can't afford it, and you got to go back and try to get some more. We're trying to avoid all of that by making a good decision.
Which policy build cash value? So as I'm paying in it, I'm saving a little bit. Some of the premium going to whatever pay for, but it is building cash value that I can take out and borrow against that policy.
Yes. So any of the permanent policies have the potential to have cash value. Whole life is going to have a cash value component. A lot of people say, oh, well, that's not a good investment. It depends on what the goal is. Universal life can have a cash value component to it. The purpose of the cash value there is generally to make sure that the policy never lapses.
Right.
You know, if you get into a tie that you can't make the payment,
policy can start paying for itself.
Policy can start paying for itself, exactly.
Yeah.
And then, of course, the index universal life, that is the one that has the highest cash value potential, where you can use all those other features that we talked about earlier.
Let's talk about the process of getting insurance, because you've already mentioned your health.
Right.
Talk about what's the process and what are some of the barriers that keep people from getting the kind of insurance that they may think they want.